Good morning. All right, so it looks like the rally's over and back down to the bottom of the trading range, possibly. That's where things have been over the last few months. But, the way it came off of the low, we'll see if it was just a technical bounce, if it can make a higher low. I think this is constructive. I mean, it's hard to get committed to too much in this market with all the news that pushes it around as it does, but the trading range has been intact. That August back and forth there looked like it had put in a decent low, especially the way it came off of there, but all the way back down, and it bounced off of there. If you listen to the news, it was okay. Bad news is so bad that the Fed has to cut interest rates, and that's good, but I don't think it was anything more than a technical bounce, but it was two wide range, nice bars coming off of the low. Not a lot of volume on it, but I've seen things go up on lower volume quite often. So this one I will see how much this comes down. And then if for some reason over the next few days, and I don't think it's going to happen today, I think this unfilled gap down here, and you can see this little shelf right there, I think that's the downside target for this morning. And then we'd see if it stabilizes in that area, if how much it can bounce from there, and we take it, a step at a time. And if it can't bounce from there, well, then maybe it's going back down to the low, which then we got to think about when it gets down there, being a buyer, with the right pattern, of course. But, we'll see what happens today and what happens, over the next couple of days. But as you can see, yesterday turned into a topping tail on the spiders there. It was that breakout failure later in the afternoon, and then it just kind of deteriorated. And you can see obviously how much it's down here. So we'll see where it goes. Qs, pretty much the same story. We did talk about the fact yesterday that they were closer to resistance, so this was not the market to go to consider longs. The others were set up better, the spiders and the Russell, but it couldn't get going, and buyers stepped away, and selling turned into more selling, and down it went. So now at 187-ish right here, that unfilled gap, 186, which is right around here, give or take, where this little shelf is from the overnight data. That's our downside target. So the gap is aligned with this little overnight data, and I think that's a good point to consider if we get a reversal pattern to consider a long, and then we'll see what happens from there. So the S&Ps, just looking at, you can see the overnight data. If it should rally here at the open, which I think is probably a decent possibility. I'll just look at the 5-minute chart. See the little shelf that's going on over here. And if it rallies up from here, up into this area, and that's what, about 29, 27, not a lot of resistance there. So obviously let's see what it looks like when it gets there. Minor resistance is always going to be a subjective reference point. Many will be using it, but this would be the initial one, and we can see there's really nothing in alignment with it. This was just like a little continuation to the downside, but the real resistance is up here in the 29.35-ish area, which is probably up in here. Right. So I don't know if it'll rally that far, but if it does, that's where I'll be looking for an M top on the 5-minute chart for it to roll over. So we'll see. If it just hangs down here and starts to break lower, well, not that far to this point here, but if there was, what I look for anyway, with these kind of patterns, I don't like the short breakdowns in this kind of a pattern here. They just have a tendency to wiggle. But if I see this bar that's perking up here, if that popped up and it turned into a breakout failure, that would be a much better setup to consider shorting a breakdown below this base. So, downside, I think likely, but neutral here at the open. Maybe, if you're nimble, you could consider a long, but buyers or the sellers have taken control here. And I think down here is where the odds are extremely much better than here to consider along with the appropriate pattern. The NQs, same story. We've been talking about this for a couple of weeks, the similarity in patterns across many of these markets. And so we've got the same thing where, this little consolidation, we had that breakout failure, retesting. This is just your classic bar by bar pattern, support, resistance, no brainer trading, to pick a point to place a trade without any lines, diagonal lines or indicators. Retest of resistance, topping tail, short it and see what happens. You got that support there. Will it go through it? Who knows? Bar by bar, just, trail prior bars highs and see what goes on there. So here, this looks like it's going to take out a prior bars high. And then we see, where it goes from there. How much can it perk up? Is it a breakout failure, which will kind of ensure that the sellers are really aggressive? If this little consolidation would result in a breakout that fails and it came back in, there has to be a lot of sell orders lurking up above to knock this back down again. So that's what I'll be looking for. Looking at the Russell, as I said, similar patterns, the consolidation, the breakdown. Look at even the same little topping tails up there. And now it's stabilizing, trying to perk up here at the open. So you notice the breakdown failure here, this little consolidation, wide range bar and the inside bar. So that got sellers, with their backs up a little bit. And now those that are short are kind of wondering, do I buy to cover and reestablish, wherever it might go? Do I go long? Those are some of the decisions, you have to make as a day trader, and or whatever the pattern is you're looking at. If you would apply this to a daily chart, it would be the same thing. So we'll see if this perks up, where it goes from there. Breakout failure, so neutral at the moment. We'll see where it can get going. But as far as being a buyer here, I would like to see a measured kind of a move pattern where this does try and perk up and it rolls down, and then we get a move down into this area, give or take. And so I don't know that we're going back down to the lows. And one of the reasons is, our internals here, they're not so bad. I mean, sentiment is actually pretty darn bullish, where these option traders have been loading up on puts. That doesn't mean it can't go down. What I wrote in the weekend letter and in the video was that, yeah, it can go down, but this tends to put a floor under the market because there's this, overwhelming bearish sentiment here, and our breadth. And, as I'm looking at this, historically, and that's what we look at, historical patterns, right? What typically happens. And so, there's an old saying, the past doesn't equal the future, yada, yada, yada. But we do see it happen a lot where, just get my little drawing thing out here. We do see it happen a lot where, prices come down to retest an area and we get breadth making a higher low. And what that means is that there's some stock showing relative strength within the market. So even though, as you could see here, breadth got to a bullish extreme down through this lower band and close to the static 1.2, the market popped up and went back down to the low. So you got a retest pattern here with bullish internals. At the time, this was beginning to suggest relative strength. And then you just start scanning through stocks and start looking for ones that aren't down as much, or you could scan for things that are still above, say, their 200-day moving average or their 50-day moving average. The green line's the 50. So market below the 50, scan for stocks that are above the 50 and the 200. And that's an easy way to find what's showing relative strength. But, you've got this volume internal down here, was down there. It's getting close again. This is still working its way. But if it stays above the 50% line, that's okay. And this could be that divergence where we get some, those stocks showing relative strength. And so if it comes down here, you got to be thinking about being a buyer. as we get into the middle of October, thinking about the end of year rally, Santa Claus rally, call it whatever you want. The internals are supportive of that. And then a retest pattern would really be the ideal scenario. And that, even with that being the case, it doesn't suggest some kind of a monster move, but, bottom of the range, maybe to the top of the range, through the holidays, we'll take it, see where it goes from there. Let's clear that up. And the Russell, which, we talked about yesterday, had the greater potential for a move higher because it had the bigger void, but it couldn't get going like everything else. Lower high, broke through support, and it's got room to the downside. So we'll see if that goes down here. And this is a decent pattern for a W bottom, meaning a W bottom. Let's just get the drawing tool again. All right. A W bottom, we don't want to see this and back down again. That's bearish for it to lose a rally of that depth and come all the way back down. But a W bottom, the textbook, is a minor, small rally that's close to the prior low and comes down to retest. And this has got the momentum move to the downside. It's textbook, right out of the course. Momentum move, shallow retracement. Now we see if we get the retest, and maybe whether it's a breakdown failure, whether it's a bottoming tail, a 180, whatever. And if it's this, just some kind of reversal pattern that says when it gets down there, buyers step up, the demand overcomes whatever supply it is, pushes up, you get your pattern, you buy it, you put a stop down here, and you go into what I like to call intelligent hope mode. What will be today, a bottoming tail? I have no idea, Alex. We'll see together. Right now, this looks like it could turn into a measured move to the downside. If things were to get ugly today on an intraday basis, coming down here, maybe a nasty day, and maybe the reversal happens over the next day or two. I think that's a potential plan. And right now, because of this pattern, the bias for me is to think lower, a continuation. So now, always different scenarios, right? What if this rallied all the way back up to here by 10:30? Well, this idea is going out the window because now I've got information that isn't aligned up with this anymore. And, that's just being smart, not being attached to an opinion, and you're saying, oh, it's got to go down. It's got to go down. Really? It's still got to go down if it's up here. So we always look at what is and then look at, what happens. So the further this would retrace up into this area, the less likely this scenario. It stays down here. Well, breakout failure, whatever patterns we talked about, well, then the odds continue to be down here. Pretty much common sense. Always common sense is easy when you have an understanding of the foundational concepts. Oil down here at support. So momentum slows down. This also looks like it could go down to retest this area down here, which isn't that far away. For an intraday, that's a decent move for intraday traders. But same pattern, in oil, similar pattern, let's just say, as equities, that this looks like it could roll back to the downside. And we've got bonds coming up into resistance, but yesterday's reversal, didn't go far, and it came down to support. Right? It made it just look to the left. Just look to the left. No fib lines, no diagonal lines, nothing, no oscillators. Just look over to the left. This is where the shelf was. Look at the bottoming tail bars. Now you've got a little shock bar right there. Rally up to resistance. Sellers are going to be up here. Now, does it go sideways? If it does, that's bullish. And then maybe it could poke higher to the top. And if this is poking higher to the top, equities should be going down. That's the way things have been working. I mentioned yesterday, it was a little surprising, the rally in the market without these bonds coming down. So, that little heads up, so to speak, fly in the ointment has proven to, been valid information. Nonetheless, the markets were going up and you couldn't fight it last week. That's for sure. Gold chopping around over here, and it's just sloppy. I don't like it. It's just for trading range. I don't see anything to do at this point since it's getting closer to the top of this range. But if this was to roll back over, well, then you think, well, the markets are probably going up, but who knows? But I look at this and I say, well, if this was to come down here, I would think to be a buyer. Got a retest of this bottoming tail bar on the weekly chart. I don't think it's coming down here today, but let's just say it gets down here next week. I think we have to be a buyer of gold down here on this pattern. And that's assuming it doesn't clear this area, because if it does, then it's less likely it's coming down here, just because of the strength that it would have shown at that moment. So a lot of wait and see in these markets, but we got plans. This one I'm not interested in. I think the best bets here are continuation to the downside, not that far to 2,900, but that's what the structure is at this time. Probably the NQs are the better short. A little further move to the downside there. They had the resistance closer and so on. So these, I think, could be the better shorting setup. Honestly, this isn't getting going, but we'll wait for the open. And we looked at that. Silver, and just jiggling around there, actually perking up here as we speak. Coming up to the top of the range, so no interest there, and it's a wide range bar after perking up. Buy at support, and I like that little double bottom down there. You buy down here, and your stop isn't that far away, because with that pattern, it shouldn't have gone down there, and it didn't. But a lot of, I don't know about a lot, but you see it a lot where, whether it's a system or a method, is buying after a greater than 100% retracement. And that's fine. It can be with the proper money management, but why buy up here when you can buy down at support where the demand is? Well, now, that's not a swing setup over here, but now what this needs to do for a swing is consolidate up here, right? Some kind of maybe inside day, what we call a 1, 2, 3, and that opens up the door to this void up here. So that's what I would be looking at. And the last thing, I hand it over to Dan. I always like to look at the transports, which are kind of confirming everything else. They don't move much pre-market, but they're already back down to the bottom of the range. And if these markets pull in, what I'd like to see is the transports not break down through the bottom of the range from that bullish idea of these markets actually turning around and being able to perk back up again. So we'll see how it all unfolds, and we'll see where today ends. That's it. All yours, Dan.
All right. Good morning. Thank you. Yeah, I was just looking at the hourly charts of these ETFs that you just reviewed, and yeah, hourlies sure look lower. All right, we have a lot of opens now, and with this bearish bias, I think my focus is going to be managing and looking at legging into a bunch of Iron Condors. I'm sure Greg will come up with some new trades here for us in the morning, but like he said, the focus is maybe shorting the Qs, 10-minute low, upside shakeout, whatever picture it sets up. So we have a put spread in Apple, the 222s here. And yeah, if we can sell a 230, 235 call to leg into a Condor. Costco, we have a put spread. A Goldman put spread, but see, this one's not a great candidate for a Condor, whereas Apple and Spiders were out of half, and we have it, I tighten the stop and it's either the tighter of whatever I posted or break even. So I'm not going to worry about a condor on this one. I'll just let it play out. IWM though is a candidate. We'll do the 150, 155s if the market stays weak. Roku, we'll just let that one play out. I tighten the stop. We have a put spread. SDC, we have a put spread on this double bottom, on these 4 bottoming tails. Ugly, you know, bar by bar retracement, you know, the general rule. That was a beautiful bar the day we entered, and it should not have retraced more than 50%. We have the 12.5 puts, 12.5 tens. So we'll just let that play out. Shop. Let's see, 322, we have a put spread. Let's see, that one is also not a candidate for a condor. It's holding the upper 50%. And we have the 295s way the heck down here. So that one still looks great. And in fact, it looks like an add over yesterday's high. Yeah, McGraw, that's exactly what I'm talking about. Which ones are candidates and which ones are not. Tilray, we have a put spread. And this one, we have the 2250 20s that expired this Friday. So we just want to go into intelligent hope mode and see if this support holds. UNH put spread for Friday. These are all for Friday, every one of them. And Urban, we have a put spread. And that one also bar by bar analysis. That's an ugly reversal, but we'll just let that play out. Let me go through our swing letter now real quick. AMT, long stock, Costco, covered call, Delta Kilo. Stopped out yesterday. Closed it. Fitch, we're short stock with a break even. Goldman, long stock. Now this is a candidate that I don't want to short it, but we can leg into a covered call because all we're doing is then capping our gains but lowering our cost basis. Cass, we legged into a covered call yesterday on the bounce, on the strength. So that was perfect timing. IRT, long stock, and I moved the stop break even last night. ITB, I tightened the stop, but look at that. That's up in a weak market. Still uptrend daily, weekly, monthly. We just have a put spread. IYT, we entered a put spread yesterday. Jable, covered call, looks great. Kim, long stock, a little real estate, core trade there. Michael Jackson, put spread, still weak. We'll see if the retest can hold. Oscar Charlie, core trade, covered call. SITC, long stock, core trade. Look at the beautiful reverse head and shoulders on the monthly. RVLV, we did a little put spread yesterday on this bottoming pattern. Whirlpool put spread, and I tightened the stop. XLE. Wow, we got a lot of positions open. So that's, this was a buy setup on major support with a nice reversal. And again, bar by bar, yesterday had a weak close. Nike gapping down here, 90.80. This is a call spread candidate, if we can get any juice in it. This carb here, it's just dead money, but I like if it can give us an event to break out. AA was in the news, but no pattern. Hawaiian Airlines, nice gap, but no price void, but we'll keep it on there. Bearish gap here, 41 bucks. AZZ, it had earnings. So that's a nice bear gap. Let's Let's put that in a window. Oh, this LVGO from yesterday we were watching. I noticed that it's gapping up 20 cents in a weak market. Healy had earnings 167. That's a very bullish gap, but it's excessive. Let's keep an eye on it though. On Domino's Pizza, earnings 228. That's a very bearish gap. Let's keep an eye on it. That could be a call spread candidate. QGen, I don't know if this is earnings or I don't know why it got whacked. I really don't care. But that's a nasty downtrend. Look at these railroad tracks, 20 and 50. It's the gap's excessive. But look at this on the monthly. Look at that. That is a big, ugly gap. Can't even see it on the monthly. Wow. Now, credit spread early in DPZ. Well, McGraw, you know the answer to that. And what is the answer? BABA 164, a bearish gap here with the, let's keep an eye on these China stocks for call spreads. But McGraw, the answer to that is go through the rest of the checklist, which is what? Remember trading gaps? Greg has an amazing 7-part checklist in his gap course. And I just kind of simplify it for speed into two steps. Compelling gap with a price void. Step 2, it has to set up properly within, it doesn't have to be 5 minutes. It can be the first 30. But then, McGraw, on earnings, good luck getting tight spreads at the open. You'll be able to drive a friggin' semi through the quotes on DPZ the first 10 minutes. Guarantee it. And then, so, thirdly, we got to get a good credit with tight spreads. So that's it. You knew the answer. I think you were just testing me. All right, 370. I read that Southwest is suing Boeing over the 737 MAX, misrepresentation. We were watching this one to see if it could make the turn right here, and it didn't. But we still might get a trade out of this, depending. I would like a double bottom retest here, would be ideal, because there's still no support to the left. There will be automatic bids to exploit. All right, McGraw, why don't you take a picture of that and show me? ASUR 855, way the heck up here, but no pattern. AMBA down on China news. Wow, that's ugly. I'm gonna put that in a different window. AMBA. Workday, I'm watching this for a put spread. And also, Daku. Ooh, there's a short, HARD. Oh, I think Alex was talking about shorting that yesterday, and I liked it. Look at Daku here. That's on my long watch. AFX, I'm sorry, FCX. Look, see, remember yesterday, I was not confident of the turn. Yeah, things looking lower here. Spider, oh, that's an ugly gap under that bar. All right, so IWM, let me, maybe 5-minute low, legging into all spread.